When it comes to making pension contributions, you have an annual allowance, which is the amount that you're allowed to contribute into your pension every tax year. Generally, the rules state that you either use your annual allowance by the 5th of April each year or you lose it come the 6th of April. But there is something called the carry forward rules, which I'm going to hopefully explain to you in this video, along with an explanation of the annual allowance rules. Checking how much of your annual allowance you have used as you approach the end of the tax year is a key part of annual tax year planning, and you could find an opportunity to maximise your pension contributions. The annual allowance is the maximum amount someone can contribute into a pension and receive tax relief. Most people can contribute 100% of their earnings, up to £40,000 a year. If you exceed this allowance, you just won't receive tax relief on these contributions, and you will be faced with an annual allowance tax charge at your marginal rate of tax. Even if you're not earning, you can still contribute to a pension and receive tax relief, and the maximum amount that you can contribute is £2,880 net, which becomes £3,600 after 20% tax relief has been applied and added by HMRC. Now, not everyone has an annual allowance of £40,000. A lower annual allowance of just £4,000 may apply if you've already started to access your pension. Check out my video on the money purchase annual allowance if you think this may apply to you. And if you earn more than around £200,000 gross per annum, you may be affected, and I say may be affected, by the tapered annual allowance rules and have a reduced allowance. This can go as low as £4,000. Again, take a look at my video on the tapered annual allowance. When it comes to measuring how much of the annual allowance you've used, you need to work out how much has been put into your pension during a given tax year. And remember, this runs from the 6th of April one year to the 5th of April the following or the next year. For money purchase pensions or defined contribution schemes, that's basically not final salary or defined benefit schemes, you simply add up your contributions or any third-party contributions that are made upon your behalf, including what your employer has contributed, making sure you take account of any tax relief that would be applied to your contributions. Working out how much of your annual allowance you have used. If you have a defined benefit scheme, the inputs amounts are different, and it does involve a calculation, which you can request. This is probably the simplest way to do it. You can request from your pension scheme directly. It is a complicated calculation, but it's important to understand if you may have exceeded your annual allowance, as you can then look to take advantage of the carry forward rules. So what are the carry forward rules? Well, the carry forward rules were introduced to help mitigate any potential annual allowance charges you might face. You are eligible from the first year you joined a pension scheme, any pension scheme. So as long as you're a member of a pension scheme for the year you're looking to carry forward from, that's totally fine. You can carry forward unused allowances for 3 years, and you don't even have to have had any earnings in those years. For example, if you're approaching April 2022 and you realise that you've contributed more than your annual allowance to pensions during this tax year, 2021 to the 2022, but that you didn't use your full allowance in one of more of the previous 3 tax years from 2018 onwards, you should be able to carry forward your unused allowance. And what's more, you don't even have to have been living in the country, in the UK. So it might be that you moved abroad 5 years ago, but as long as you had a pension scheme that you were still a member of when you came back to the UK, you can then start contributing to pensions again and potentially use carry forward to make up for missed pension contributions for the time that you've been abroad. Understandably, you can only benefit from carry forward once you have exceeded this year's annual allowance. Once that's the case, you start by jumping back 3 tax years to use up any unused carry forward first. Then you go back 2 years and then 1 year until you've used up any unused allowance. The reason for this is to ensure that the oldest unused allowance is used first. So you use it and you don't lose it. Just to be clear, the carry forward rules only apply for the standard or tapered annual allowances. It does not apply to the money purchase annual allowance. Thanks for checking out my YouTube channel. I'm Justin King, a chartered and a certified financial planner. And my aim is to help people live successful lives. That often involves understanding your money. I hope you've enjoyed this video, and if you have, please press the like button and subscribe so we can notify you when I put out new videos. Thank you very much for watching, and I look forward to talking to you again soon.